What is going on, guys? Bexio back, and today we got a brand new video. This time with inflation because it is going higher and higher, continuing its 40-year high streak for another month in a row. Right now, the inflation rate just eating away at any savings you could possibly want, and everything it just seems to be getting worse and worse. But the data is out, and we can see that right here. Just looking at the latest numbers right here, overall the CPI 8.5%. Crazy numbers. Ridiculous to really see this still going on. And CPI is designed to stay low, so this is getting high. You know, the real inflation getting pretty bad. But the even worse part, looking at this, you can see 1.2% for month over month. So that should be, so that's from April to, or March, or February to March. The crazy 1.2%. There's ridiculous numbers. That is 14.4% of annualized inflation. That is double digits, ridiculous, and that is month over month. So that, you know, takes away something from going back a year and saying things are so different, demand so much higher, this and everything else. That takes into account what's going on right now, and it's getting crazy. And then food, or CPI core, which is everything minus food and energy, is 6.5%. That's still ridiculous. We know food and energy are volatile. This is still high. But the number that everyone's going crazy over is this one right here, 0.3% for month over month change in core inflation. So not including food, not including energy. It's 0.3%. I think it was expected to be 0.5%, came in at 0.3, and everyone's looking directly at that because it's the only number that went down compared to the last month, whatever, 0.5, and now it's 0.3. It's the only one that went down, the only one you can point to look good. And I don't know why people even talk about core inflation. Like, it doesn't matter. This is basically saying as long as you don't need to eat, you don't need to use electricity, you don't need to buy gas, you don't need to heat or cool your house, then you're good. Inflation's not affecting you. You're doing great. We're getting to a better and better place as long as you don't need any of those things. So, not sure anybody would even look at that, but this, if we zoom all the way out to 1914, we can see these like massive swings that just haven't happened in a long time. And this is our tick up here, which is the highest since 1981. So it's still ridiculously high. But what we probably don't want to do is go back to something like this where we're swinging up and down violently. That would not be very fun at all. But if we zoom in on this and look at this from right now, we can see basically January 2020 coming down probably around March of 2020 or 2021. We started this extreme massive climb up. And if we're looking at like year over year data right here, we can see when that happened right here, basically March. So this is the March data in April, 4.2. And this is the February data. So you could say maybe like, you know, end of February started, but 2021. And this is going to be important for something that, you know, people and politicians and governments trying to sell to everyone, because I don't know, they think that everyone is just dumb. And that would be this right here. We just need a few of the opening seconds here to see, you know, what are we blaming today for the whole thing here, all the inflation going on.
So because of the actions we've taken to address the Putin price hike, we are in a better place than we were last month.
So those words right there, the Putin price hike, it doesn't make sense to say any of that, to call it that, to think that people are dumb enough to look at this and say, yeah, it's all Putin's fault, even though it started in the last year. Yeah, and Putin didn't invade Ukraine or do any of this till 6 weeks ago, but it's all Putin's fault. And you can see that here where it started going crazy. Let's even just take this away and go from March, where it went to 4.2. Went 4.2, 5.0, 5.4, 5.4, 5.3, barely down, 5.4, kind of stabilizing here. And then the explosion, 6.2, 6.8, 7, 7.5, 7.9, 8.5. We're going in on towards double digits and going crazy with inflation. So, I mean, to kind of zoom in on this one number and to look at it from just 6 weeks and say inflation is really bad because of Putin, which maybe, you know, you can attribute gas prices and energy prices and global energy and stuff to actions that Putin is doing, but you can't say all of inflation is because of Putin when it's not. That's just not how it's happened. He didn't invade Ukraine in March of 2021. It didn't happen. This trend of, if we look at last year, we can kind of see a mixed bag, kind of starting low, getting high, but stabilizing, and then getting, really going exponentially here. In 2022, we're just seeing it keep going up. We 7.5 to 7.9 to 8.5 to next month should be a lower reading. And what everything happens, we're getting into the overlaps now where these April numbers came in and they were starting to get higher. 4.2, they started to accelerate there. So if we see if we see 9% or even 8% next month, that is devastatingly bad because we're looking back year over year at a time where inflation was already big. So it wouldn't be surprising to see inflation come down to 6%, 5%, and then everyone's celebrating that and say, see, inflation's coming down, we're good, everything is great. But at that point, next month, we're getting into compounding inflation where we had 4.2% last April. And if we have 5% this April, but you're looking at the last number with 8.5, we have compounding inflation, which is not what you want. Compound inflation. That's the worst thing you could get. And just to have things going worse and worse and calling it better because the number is better than the last number that came out. So hopefully, inflation does come down. We don't want this going crazy, but there's not really anything going on to kind of expect that to happen. And then even worse, to dig into all this inflation stuff month over month. So now we're not even looking year over year and comparing a year ago to right now. We can look month over month. And if we go in 2022, this is ridiculously crazy. We can see it right here. We opened in January with 0.6, then to 0.8, then to 1.2. So the inflation is accelerating month over month. That is not good because this is looking at last month's stuff. So it's not looking to a year ago saying, a year ago demand was really low. We were having a bunch of problems and now we don't have those problems as much. This is looking at last month and it is accelerating. It's getting worse. 1.2% inflation annualized is 14.4%. If we start hitting those numbers, we're getting into hyperinflation territory and massive problems. So with everything coming out in inflation, the market is kind of indifferent. It's still just kind of chopping up and down. I mean, we see the mega caps. Apple is actually up today, barely. Tesla's up a little bit. The S&P is actually pretty much flat, down 0.27%. Nothing crazy going on. I mean, cryptos are getting hammered and volatile. So Bitcoin was just over 40K. Now it's under 40. We're seeing just a lot of volatility and at the same time, a lot of nothing going on. So, we had the big move down yesterday, kind of in preparation of this. The numbers came out that are going to be extraordinarily bad. So the market probably already really priced in worse numbers than this and just kind of going flat here. But brings up the fact that the Fed could get harsher on inflation, could get harsher on interest rates. We could see a 50 basis points, so 0.5% raise in interest rates, which would be what the market is kind of pricing in, but not ready for. If we get that, massive red, just massive, instantly red in all markets, and seeing the Fed getting really hawkish on this stuff. So this is going to affect the markets. It's going to affect everything else. And we're going to see if anyone ever takes inflation seriously and tries to do something about it. So inflation continuing its 40-year high streak, just getting worse and worse, and even getting worse, compounding month over month. I mean, the Fed's probably going to have to step in to do something and make sure that they raise interest rates and tighten a lot harder or a lot faster than they were thinking they originally expect to, and that could catch the market off guard, catch a lot of things off guard. But inflation, one of the biggest problems right now. But that's going to do it for this video. As always, I'm going to smash the like button and subscribe on the road to 1,000 subscribers, and I'll see you guys in my next video.